Good morning to everyone. Uh, I'll give you just small tips in the fifth unit, income from capital gain. So we have a concept called, term called stamp duty value. So I'll make it big, font size big. Now stamp duty value. Okay. What is the stamp duty value? What is the stamp duty value? And this stamp duty value is the value. It is the value. So it is a value fixed sale value. It is a sale value fixed by the government. Fixed by the government. Right. Now this happens. I said this happens. This happens only in sale of immobile property. Right. If you're selling land and building, sometimes in the problem, you may get a new term called stamp duty value. Okay. Right. Now, how to find out the actual sale value? Suppose in the problem, he has given stamp duty value, okay, that is equal to, let us say, he has given 10 lakhs, okay, and he's also given the sale consideration, right? Let us say he has given some value as, let us say, 6 lakhs, right? Now in the problem, you may give these two terms, stamp duty value and sale consideration. Now your duty is, what is the actual sale consideration? The actual sale consideration will be higher of the above two. It means higher of the above two. So what is the higher value of the above two? Now this is the higher of the above two. That means you have to compare stamp duty value with the sale consideration, which is higher 10 lakhs, right? Which is higher 10 lakhs. So 10 lakhs will be actual sale consideration. Okay. So actual sale consideration will be 10 lakhs. Good. So don't forget it. If they ask you they're given the value of stamp duty value, their value fixed by the government or the sale value fixed by the government, and they also given sale consideration. You like whichever is higher, that is an actual sale consideration, actual value of sales or actual sales value. Right. This is the first point, very important point here. Right. Now, second point is, suppose he has not given sale consideration. Suppose if sale consideration is not given, okay, what we have to do? Okay, what you have to do? The sale consideration is not given. What you have to do? You have to consider fair market value as sale consideration in the problem. Right. This is second important point. If the sale value is not given, you have to take the fair market value as sale consideration. Right. This is the important point you have to make a note. Third one. Third is, so any asset purchased before 1/4/2001. Okay. What you have to take? You have to take fair just remove this one. Fair market value, right? And cost of asset purchased before 2001. So you have to select whichever is higher. So that is called actual cost of acquisition. Actual cost of acquisition. So you have to consider fair market value and the cost of asset purchase before 2001. Compare it, whichever is higher is called the cost of acquisition. Fourth point, the CII, cost inflation index value, will be always 100 if any asset is purchased before 2001, right? It will always be 100 if purchase any asset before 2001, right? But for previous year, the previous year, that is 2021, the CII value will be is right 313. This should please remember this things. These important points. Okay. Now, next important point is all depreciable assets will be treated as short-term capital gain or loss irrespective of the duration. So like building, furniture, machinery, equipment, these are depreciable assets. So we are not concerned with the duration, more than 3 years or less than 3 years, because the depreciable assets we can have to treat as short-term capital gain or short-term capital loss, right? This is the important point there. Now, the sixth point, any improvement expenses incurred before 2001, right, should be known, right? And incurred after 2001 should be considered. And you know that improvement expenses, it means you have to either construct additional rooms, additional floors, not the common renovation and painting. So we don't take as renovation or painting or whitewashing the building. It is not called improvement expenses. So it means improvement expense means you have to either construct new floor or new room, additional rooms. Then only it is called improvement expenses. Simply whitewashing or painting the building, it is not called improvement expenses. So that you have to ignore it. So whitewashing or painting or renovating, you have to those incur those expenses. You cannot call them as improvement expenses. You should ignore it, right? The seventh point, we will not calculate indexed cost of acquisition in case of short-term capital gain and in case of bonds and debentures, right? So we cannot calculate, we will not calculate index cost of acquisition or index cost of improvement in case of short-term capital gain and in case of bonds and debentures, right? So you remember that index cost of acquisition is equal to formula is cost of the asset into previous year index divided by index of purchase year. Similarly, index cost of improvement is equal to cost of improvement into previous year index divided by index of that year in which improvement expenses incurred. Right. So I think I covered all the important points in the last unit, fifth unit, income from capital gain. And now we'll discuss section 54. What is section 54? Now section 54. Section 54 says that, I'll describe briefly in a nutshell, right? Now it is section 54. Suppose you sold your residential property, right? You sold your residential, right? And you got a gain of, let us say, some amount, gain of rupees, now 20 lakhs, right? So this is called income from long-term capital gain, right? On the 20 lakhs, you have to pay 20% tax. Means you have to pay how much? You have to pay, I think it is 40,000, right? On 20 lakhs, on 20 lakhs, 20%, you have to pay 40,000 as 40,000 or 4 lakhs. So 20 lakhs, 20%, 4 lakhs you have to pay, right? Sir, I don't want to pay 4 lakhs as a tax on capital gain, right? Now, what you have to do? Immediately, that means section 54 says that you have to buy another residential property, right? Suppose you are buying a ready-made bed, okay? To get exemption, under, I just take it out, this underline under, okay, section 54, you have to buy another residential property, okay? When you have to buy within within 1 year before sale or within 2 years after sale. Okay, this is to buy ready-made constructed property. Okay, suppose you are constructing the property. Okay, suppose you're constructing the property. What is the time period duration you will be given to get the benefit? You have to construct the property, right, within 3 years from the date of sale, right? This is the duration is given to you. If you want to buy the property before sale, within 1 year before sale and within 2 years after sale, suppose you want to construct the property within 3 years from the date of sale, you have to construct within the time duration. Okay, if you don't do it, whatever the benefit you are going to get, that will be revoked, taken back. And importantly, you have to deposit the money. Should not keep you the money, whatever 20 lakhs you got a capital gain, you cannot keep the money with you. You have to deposit the money in the capital gain accounts scheme of any nationalized bank. Okay, nationalized bank, right? Because this is important. If you don't deposit, if you keep the money with yourself, then you cannot get this exemption under section 454, right? You cannot get the exemption under section 54. This is what the section 54 says that. You are selling in a house or apartment, you want to get benefit under section 54, you have to buy another apartment or house, the time duration is mentioned, or you have to construct within the time duration, then only you will get the exemption. And the condition is, suppose the condition is mentioned, what is the condition? Condition is that means terms and conditions will be there for everything. You should not sell the property. You should not sell the property. Okay. For 3 years. Okay. From the date of sale. From the date of sale. What does it mean? After buying a new property, okay, till 3 years, you have to keep the property with yourself. You cannot sell it. If you sell it, the whatever the exemption is given, that will be taken back, revoked. Okay, so till 3 years, you cannot sell the new house. You cannot sell the new house, right? This is what the section 54. Okay, you sell your house, you can buy new house within the time period given to you, stipulated time, right? And you have to deposit the money in the capital account gain scheme of any nationalized bank. This is what the section 54 explains you, how to get benefit under section 54, right? Now, another section that you have to learn is section 54B. Section 54B. Right. What does section indicates? This is, I will highlight it and make it bold. Right. What does section indicate? The section indicates that suppose you have an agricultural land. Okay. Yeah, agricultural land. Okay. It showed the land, that is agricultural land. Okay. And you got a capital gain. You got a capital gain, right? Okay. On the capital gain, you have to pay 20% long-term capital gain tax. Okay. Then you should get some benefit. What you have to do is you have to buy a new agricultural land. Okay. You have to buy, after sale, you have to buy a new agricultural land within 2 years from the date of sale. Right? From the 2 years from the date of sale. And the condition is you cannot sell the new land for 3 years from the date of sale. You cannot sell the new land, that is agricultural land, for 3 years from the date of sale. Okay. Then what is the exemption? Exemption is you may get exemption under this section 54B. Exemption is cost of new agri land plus, I told you have to deposit in the capital account gain scheme, plus amount deposited in capital gain account scheme. Okay. Scheme. The second is capital gain amount. Whatever the gain you have in have enjoyed, capital gain amount. The least of the above two. The least of the above two is allowed as exemption. Okay, it's allowed as exemption, and the same will be for section 54. The same exemption will be there for section 54. The same exemption. For section 54, cost of new house plus amount deposited in capital gain account scheme, and second is capital gain amount. The least of the two is allowed as exemption. This is applicable even for section 54 and 54B. Okay, so this should be very important, right? So please don't forget it. So don't get panic in the examination. Okay. I just say the capital gain important. Right. So 54 and 54B. Now, after some time, I prepare a video on 54 D, 54 EC, and 54 F. Right. Please watch my video. Let's stop here.